This is Zach Nelson, CEO of Genzio Media. Super excited to be speaking with JP from Mantra. Obviously, a lot of kind of news going on, a lot of different things in the press. So I wanted to speak with you directly to kind of get our audience's questions and to get the full story out there. So before I kind of get into my questions, I would kind of just love it if you could tell sort of our audience in your own words, sort of what this last week or so has been like, and what kind of led us to this moment.
First, thanks for having me on. Appreciate the ability to kind of speak from our perspective, what went down, and talk to the community a little bit more broadly about what we're doing about it, and kind of the way forward. So obviously, we became kind of the talk of the crypto space, and maybe even more broadly. I think it's even past just within the crypto space right now, but over the weekend, when the price plummeted drastically in a very short period of time, there was a lot of rumors swirling around about what happened. Was it like insiders? Was it team selling? Like, what was going on? Was there a rug pull? Was there an exploit? And I think in the kind of the aftermath, we've been able to kind of really break down a little bit more clearly what's actually occurred, and kind of looking forward to tell our side of that story. But it's been honestly probably one of the hardest weeks of my life. Obviously, like barely slept, barely eating, but doing my best to be as present and communicative and transparent as possible. Just because this is an unprecedented scenario, and we want to be there for the community, and ensure that we're doing everything in our power, and working as hard as we possibly can to make things right, and want to instill trust back into the market that we have a plan of action, that we're not running from anything, we're not hiding, even though obviously this was a terrible, traumatic situation for many. We're going to do everything we can to bring it back to normalcy, or as much as we can. So
we kind of got a bunch of different questions from folks when we said we were going to do this. So I'd love to kind of just launch into what people saw was sort of the biggest issues, or the perceived biggest issues, address them one at a time. So the first one that people kind of were more concerned about was, I guess if you could tell us kind of where we are now, like why did that sort of crash happen? Like in your words, why did that happen, and how did that leave us here today?
yeah, so obviously over 2024 and beginning of 2025, Ohm had a miraculous run. I'd say a lot of people in the Western world aren't as familiar with Mantra. I'm based in Hong Kong. I'm an American guy, but I was based in Hong Kong, or I am based in Hong Kong, I should say. Currently in Dubai. So the team is primarily between Asia and the Middle East. And we've been kind of an Eastern project run by Western people. And a lot of people in the United States or Western world weren't that familiar with the project. So people are like, what the hell? How did we miss this? What's going on? Like, no one's ever heard of it. People say no one's ever heard of Mantra. And I would say, well, that's just not true. You're just in the wrong part of the world where they have heard of Mantra. And there's a lot of people who've heard of us. It's just not on your radar. So, we have been building Mantra for, nearly 5 years. I started working on it in beginning of 2020 during COVID, launched the token in August of 2020. So middle of DeFi summer, been building it for a long time, have had, multiple cycles, number of ups and downs. And, I think we had this, our first big comeback really was at the end of 2023 till, just, last week, where we, had a really strong run. We, kind of iterated within the business and, shifted from like a DeFi dApp to, a layer one blockchain focused on RWAs. We'd always kind of been building towards this. And, there's a whole story behind that, which I'll probably tell another time. But one of the things that I think people have been talking about is like, how did this happen? Like, how did we get to this point in the first place? And, who was even involved in terms of like making this thing as big as it was? We have strong institutional partners, strong institutional backers. We are a licensed business. We got licensing in the UAE. So there's been a lot of strong catalysts that have kind of driven us to this, to this position. A lot of speculation on like, was this a fair valuation for this? And kind of my counter to that would be like, what is a fair valuation for almost anything in crypto, given that there's there's not a whole lot of fundamental valuation methodologies for any of it, and is it a fair statement to say that maybe that the price ran ahead of the substance? Possibly, but I will say we were doing everything in our power to make sure the substance caught up, or at least was trying to maintain its pace, right? And one of the things that I think perpetuated this was there was you know significant leverage involved in this kind of like blow up, from what we can tell. And I think we'll probably dive into that a little bit deeper, but you could almost see, well, you could see when basically there was like collateral ratio cuts on one exchange, tokens flowed from one to the other where the collateral ratios were still high. And you could kind of see this movement on chain, or you could see this movement on chain, which a lot of people, insinuated was like dumping. But clearly over the last, few months, the price hasn't really dumped, right? It's actually gone up. And honestly, what we've kind of inferred here, or what we've kind of been, led to believe or figure out, is that it was basically just shifting of collateral and risk and leverage from one exchange to the other. And over the weekend, somehow or in some way there was some sort of targeted move to either hunt liquidation levels or figure out how to kind of like target a support or something that perpetuated a massive unwind, panic into the market, additional short selling, and all these different types of activities, which spiraled honestly uncontrollably to the point where we're at now. And then, of course, in the immediate aftermath, people were calling insider rug pull, scam, fraud, all these different types of things. And it's pretty important that we can set the record straight, but also that immediately we've been kind of front and center, I have at least, trying to communicate with as many people as possible on Twitter, on different media outlets, just to make sure that people can understand that, hey, like, this was an incredibly unfortunate situation that occurred, but we're not backing down from what's the fallout, basically, and we're going to be here to do what we can to pick up the pieces.
I just kind of wanted to, maybe get into some of the more topics in detail that kind of people have been bringing up to us. And it seems like the biggest three things that people have mentioned or had concerns about was they believe that there's an inflated circulating supply, greater team control of tokens than was publicly aware. And they also, the other concern is weird price manipulation with maybe some market makers who were not as honest. So just kind of wanted to get into the first question, which is you previously mentioned a mere bucket wallet that holds mainnet coins that are one-to-one with the ERC supply that got fed into the bridge and released when the ERC tokens are burnt. Different community has come to us and argued with us about, and kind of said, like, push back on that a little bit. They mentioned that the wallet had multi-million-dollar transfers not tied to bridge and was sent to what they thought was team wallets. At this peak, it appeared that the wallet held billions. Maybe talk about this perception or sort of what the deal is there.
Yeah, so I know where it comes from. I know exactly the Twitter post that you're referring to. There's like a couple of them that are spreading this misinformation without a whole lot of substance behind it. But it's caught on, and it's something that we need to address. Like saying that we own 90% of the supply and that the real float is like 1% is ludicrous. And it's frankly, in this situation, a complete red herring. Right. So if you actually look at where all of this went down, so let me just start there first, and then I can address the second part of it. If you actually look at where this whole situation occurred, it was purely on the ERC token, right? Literally only. And people are using this like tokenomics, perceived issue, as this like bigger thing that caused this, but literally the entire situation was on these two major exchanges, Binance and OKX, right? That's where all the tokens were moving around from, right? I'll just call them the two exchanges for now. And both of those exchanges only accept ERC tokens. The mainnet is not integrated there yet, right? So anything to do with mainnet in this situation can automatically be thrown out from that perspective, right? On the other side, basically the leverage that was built up again was using ERC, tokens as collateral. Whereas actually on the mainnet side, we are only listed on a number of different centralized exchanges. Like Bybit, I think, is the biggest one. And saying that we have control over 90% of the supply is basically saying that in our possession we had like 800 something million tokens or 900 million tokens because of this mirror bucket. But if you look at the facts, go on Etherscan. Literally all you needed to do is go on Etherscan, and you can see on Etherscan on the ERC token, which as of today is 99.99% in circulation. 99.99% in circulation. So 888,888,888. I think there's like 40,000 tokens that aren't in circulation today. So 99.99. These have been in circulation consistently emitting since August of 2020. It's on. Okay, you can look on Etherscan. The number one wallet holder, OKX. The number two wallet holder, burn address. Number three wallet holder, staking pool. Number four wallet holder, Binance. And then there's multiple Binance wallets, and there's multiple other large holders. How is that us? It's not. It's impossible. And then if you go and look at how the actual dynamics of the move from the ERC work to the mainnet, I know it is a relatively complicated thing, but the way that it's being portrayed is just basically saying that we control a bridge amount of tokens, and therefore we control the supply and have a low float. And to be completely honest, like it's been a challenge to get people to move the ERC over to the mainnet because we're not integrated with the mainnet on Binance yet. So people want to keep their token that has the most liquidity, which is obviously going to be the ERC. That's why out of the 888 million, only 100 million are bridged so far.
Even though most ERC20 tokens were circulating, a lot of people said that the liquidity on sexes was extremely thin. What is your kind of response to that? Because they said, people are asking me, don't market makers usually step in to buffer these kind of massive drops that happen?
The vast majority of people don't understand markets, honestly, and liquidity, and the difference between spot and perps markets and how these things dominate and drive pricing. We were doing, in an average day, probably around 100 million volume on spot across exchanges, 100 million USD-ish. And on a good day, up to 200, 250, 300 million, 400 million on spot. Perps, you usually get anywhere from 3 to 5 times that. Obviously that's not necessarily the same as saying that this is like that amount of liquidity, but at the same time, the way that this played out was effectively driven in perps markets to start. So the pricing implications initiated in the perpetuals market, right? And I think there's been some pretty strong evidence that's been put out by third parties. There's a independent article that was written by a guy named LTRD. Yeah, that one. And then another one, TraderView 2, I think his name's Dom, who put out some really good analysis about how this actually worked. And they were basically showing that there was initially some spot selling on OKX, like maybe $4 million in a minute, which is like not insignificant, but I mean, definitely out of the, not out of the norm, but it's like $4 million dumped, market sold is a lot for anyone. Okay, well then on top of that, you had this like massive short that was entered, or massive perp selling that entered at, I think, like roughly around the same time. That was, I think, around $15 million in a couple seconds. So you had this triggering event that pushed the price down. And normally what you see in a liquidation is you see this like rebound, right? Like you see this boom and then it pops up a bit. But what ended up happening here was that happened. Collateral was seized because it was ohm on ohm leverage, right? Collateral was seized by exchange, and then that started being sold in the spot market. So you started having the spot market get flooded with selling. The short stayed open. It never closed. It didn't need to close because the spot kept getting sold. And then because the spot was getting sold, particularly on one exchange over the other, you had this price divergence where there was a deep discount between one spot market and the other. And you actually just started having this arb, where a bunch of arbors came in and tried to like arb across the different exchanges on the spot. And that's why you saw it like stayed steady at 2.5 for a little bit. And then when that arb closed, poof, straight down, which was just more spot selling. So it was just, honestly, it's one of the craziest incidents I think in like crypto market trading, history to a degree. Just some of the dynamics, and those guys I think did a really good job of kind of researching it and understanding it. But there was nothing that a market maker could do. I mean, we got the logs from our market makers. They were bidding as much as they could. I mean, right? Like market makers are not meant to take directional risk. Like most people don't understand that, right? They're meant to be delta neutral. They're not taking directional risk. Our market makers are our investors, right? So they tried to step in as much as they could, but at the end of the day, right? Like this was not a, I think one of the other issues is that not all the public data was put out. Like I think there was not, I don't say misinformation, but just not correct information about how much liquidations actually occurred. Similar to when Bybit, had the hack or whatever, and then Ben came out and said like, the information publicly on how much liquidations occurred is like not anywhere near accurate because the way that the public data gets pulled is like on the second or whatever, rather than the millisecond or something. So you're missing all these different types of actual trades and information that are happening. So it was grossly underreported, and actually now we can't even find the public data. I think it's been scrubbed. So that shows something as well. But basically, this was like, hundreds of millions of dollars of sell pressure and, liquidations. And, that's not being reported. I mean, I think it's being reported as like 41 million.
Yeah, I mean, I even had a number like like you said, 4 million, 41 million. You're saying there was hundreds of millions that's not being reported accurately.
Yes, maybe more. I mean, this thing did $3 billion of volume on spot that day. On spot.
I mean, I guess just to kind of get back to the 4 million, would you say that supports sort of the claim that liquidity is thin if 4 million in sell pressure can cause cascading liquidations?
Well, the 4 million wasn't what's caused the cascade. It was just the tip of the iceberg. Then you had additional perp selling on top, and then more and more and more, right? And I think the other thing was, I can't speak with 100% clarity on this one because it wasn't my position. It wasn't any, I don't know the specifics, and we've actually called for exchanges to give more information about what happened. But I mean, let's see if that happens. But the thing is, like, if you have a liquidation or a margin call, or usually a margin call, I mean, usually you have a margin call, and then you have some time to fill the margin call, and then if you go lower, then you have the liquidation. But depending on the relationship and the size, usually you're not going to unwind risk like that on a Sunday evening, right? You're going to try to do it in an orderly, professional way, so you don't absolutely wreck the market. And clearly that wasn't done, and the market did get wrecked, unfortunately.
Why don't you think that was done, I guess?
I mean, maybe it was just poorly managed. I don't know. I mean, if like this is, we're talking hundreds of millions of dollars of positions here that got wiped and unceremoniously unwound, and there's still people, which we believe exchanges, who have bad debt and positions right now.
They're switching gears a little bit, because I appreciate the clarity on that. The other kind of allegation that I had been hearing was that there was team wallets that Sybil the Ohm airdrop and weren't removed.
Yeah, it's the same thing.
Were there certain anti-Sybil mechanisms in place, and how did you ensure fairness in the initial distribution?
What this particular person is referring to, and I think what's being grossly and potentially improperly represented in that, is that the person who came out with all these claims is mad because they're the one who snitched on people and was meant to get a reward for snitching on these wallets, literally. And they were mad because we said these wallets that you've referred to us, we were already aware of. So during this airdrop period, by the way, that's not public information because they obviously left that out of their analysis. But effectively, when we had this airdrop campaign, some context for the listeners, we announced an airdrop campaign in the beginning of 2024. This was for 50 million tokens. At the time, it was like $5 to $10 million worth of tokens, and it ended up running up to like $400 million worth of free airdrop tokens. And because of that, like I was kind of, I don't want to say forced, but I made the decision to extend the airdrop vesting. And basically, we went through an exercise where we said, okay, hey, we have a bunch of community members who have bought this thing, who have a cost basis, who put their hard-earned money into it, and there's a bunch of people who farmed the shit out of it, and a bunch of people who botted it. And frankly speaking, it's my responsibility to make sure that someone who has 50 wallets isn't going to use those 50 wallets to go farm and dump on the people who paid for this thing. It's my responsibility, honestly. And we did a simple reduction where we worked with a number of third parties, I think FIDE and Range and a few others, and we came up with a methodology with their help and support that was able to detect malicious or botted and farmed activities, because that could sync wallets. And we looked all over the internet, because people were bragging about how many wallets they had and posting it in Telegram and all kinds of stuff. And we did a symbol reduction. And then this person was obviously upset about it, because they were meant to get a reward. I think they were even still going to get some degree of reward, but maybe it wasn't as much as they wanted. And they said that we used the bridge or the mirror bucket as a way to like reduce symbols. But what they're completely missing is the fact that all the activities for earning rewards for the airdrop were before the chain was even launched. It had nothing to do with the bridge, right? So that's the first point. The timing doesn't make sense. And the second point, and if you actually, again, this is why it's so important to have proper information out there in the market. People just shout into the ether on crypto Twitter, make statements, make accusations, throw wallets, but don't put any actual evidence and supporting statements behind it. They were literally saying that there's like 4 or 5 exchange addresses that they actually say are our team wallets. Like they labeled a Bybit deposit address as our wallet and said we were commingling stuff, and therefore we're like, so there's just all these different allegations which have no basis. We refuted them. We put out a public statement. They came with no evidence to counter that, and just said, "Oh, it's bullshit. Oh, you're lying." Again, classic misdirection when you don't actually have any facts to back up your statements. And that's kind of honestly, that's just it.
That makes sense. And the kind of the follow-up for that is, how can the organicness of the user base be verified? And because what was reported to me was that even during the time of the incident, the chain had 4 million in TVL, 2.5 million in stables versus a $6 billion market cap. And the criticism there was that there was not much activity related to price. What are your thoughts on that? And are those claims accurate? And
Yeah. So, a few things. First, if you actually look at the wallets, we have 130,000 on the ERC side of wallets from the historical time. We have over 200,000 wallets on the mainnet side. So you're talking just on-chain wallets within that hold Ohm in, over 250,000, significantly, right? 300, 400,000 potentially, not even including exchanges and whatever other users are there. So to say that we have no users is frankly bullshit, and not researched. We definitely did not have a ton of DeFi activity yet. The chain is in its nascency, the ecosystem is in its nascency, and we're in the process of building. And a few different dApps have started to come up, and we had a lot more coming. And actually, we had a few different interesting things that have now kind of been put on hold just because of this incident, unfortunately. That hopefully we'll be able to bring back and show that, like, hey, there's actually real DeFi activity happening on chain. That being said, we're an RWA chain. So we had been focusing on both this DeFi side and the permissionless area, and then a permissioned version of, some of the RWA stuff that we're working on. And we have, I think, on record when RWA XYZ, like 75 million of assets on chain. But actually the real number that hasn't even been verified, I think, is closer to like 120, 130 million.
that's the TVL you're saying?
That's TVL. Yes, that's correct. So that's like, people point to the number on CoinGecko, which only takes DeFi TVL and a specific way of DeFi TVL. It doesn't take liquid staking TVL or anything like that. Fair enough. It's fine. But I think it doesn't necessarily show the full picture, because what we found from an RWA perspective is like, in order to actually get classified as what crypto people determine as TVL, it needs to be recognized on DeFi Llama, and DeFi Llama doesn't count RWAs as TVL.
Oh, I didn't know that. I mean, that's fascinating. And I think probably a lot of people miss that in the sort of initial analysis. So again, that's why I'm really glad that you're, on here to kind of speak directly to the audience because, these people who are making these allegations may not come and actually interview or want to follow up because like you mentioned, and I'm just here to kind of try to get the best answers I can from you.
Appreciate it. I mean, listen, like I'm all here for, constructive criticism and keeping us honest and all this stuff, right? Like we want to address these concerns head on. But the one thing I think is challenging is just like there is just a lot of misinformation that like people latch onto, and these different red herrings that like, again, the mainnet token and the tokenomics had nothing to do with this, right? The lack of activity on the chain or perceived lack of activity on the chain had nothing to do with this, happening. And I think what we're trying to get across is that there was clearly some sort of targeted maneuver, whether that was like maliciously intended or just a trade. I don't know, and I'm not going to insinuate anything, but someone went out there and had some information that they were able to capitalize on and someone made a shitload of money on this. But it's not us. It's not our team. It's not our investors. Honestly, I think even some of the exchanges lost a shitload of money on this too. So I really do think like if you try to follow, because that's what no one is asking here. Who made money? And where did the money freaking go? Right? Like if we're talking like, massive wipeout like we saw, where did the money go?
No, it's a great question, and I kind of wanted to segue into the next topic. So so far we've covered sort of the main thing, which was the inflated circulating supply. The next thing that people would bring up was what happened with the price there. And one thing that people brought up was the loan option model. So I don't know if you can walk us through the loan option model that was used in these market maker deals. And for our audience who may not be familiar for this, what's the structure and incentive? Why have a loan option model versus a retainer model?
Sure. So usually the market making agreements are those two models: loan option or retainer. Or like sometimes they have these like profit splits, which I think are just complete scams. And generally, I mean, we've never used one of those, but basically, the retainer model is you pay like X amount of dollars per month, and you provide both the bid and the ask liquidity. So you provide or quote, right? You're providing your token and you're providing USD or Bitcoin or whatever you're quoting against. So you're providing both sides. In this model, like it's your inventory. So depending on how deep of inventory you have, depending how big your treasury is, like you're limited on how much liquidity can be provided by how much dollars you have in your treasury, right? So a lot of people like to use loan option models. What that means is you basically take only the tokens. You only take one side of the quote. You loan it to a market making or trading firm. You have certain KPIs on uptime, bid alpha depth, like all these exchange quoting and all these different things. And usually you try to find market makers that are strategically supportive or can get you on exchanges or do whatever, right? And how these things work is they basically you give them a token amount. In our case, generally it was like 1 to 2 million tokens, roughly ish. And this was back at like these agreements are all from 2024 for us, right? So the dollar value of the notional dollar value of those agreements is significantly different than like if you're talking 1 to 2 million tokens today. But anyway, usually what happens is say, okay, hey, the token is at, let's just say $1 to be easy. At the end of the tenure of this agreement, 12, 18, 24 months, whatever it may be, if there's a strike price above a certain premium of the current price of the token, we will give you back. Or sorry, if the dollar value is above the strike price, we'll give you the dollars back because we'll execute the call. And if it's below, we just give you back the tokens, right? And sometimes these can be, 50% premium, 100% premium, 150% premium spread out. And, everyone is slightly different, and it's up to the project to negotiate and up to the market making firm and trading firm to negotiate how those things are priced. All of our loans are still outstanding. None of them have executed, and they were all relatively insignificant into the size of the market and the size of the amount traded. And again, all of the market makers that we work with, which I've publicly stated, they're all our investors.
I think it makes sense, the incentive for the market makers. Just like for the teams that are watching this, what is the incentive for teams to do the loan option model?
It's because you don't have to give them the USD quote, right? So like, if in this case, all you do in most projects, token rich, cash poor. So this allows you to go provide liquidity. Obviously, you're potentially foregoing some upside on the token if it goes above the strike price, but you're providing liquidity to your token, maybe getting some strategic relationships from these trading firms, and at the same time, you don't have to provide dollars. So that dollars can be used to invest into growing the business, paying staff, doing different things.
And I guess sort of, is there like an underlining mutual goal of the market makers potentially helping with, pumping the price?
No, absolutely not. Market makers are delta neutral, meaning they don't take directional risk. And generally speaking, anyway, like basically how this works from a trading perspective is like, you give them a loan and then they're going to hedge. They're going to hedge the price on perps of the call, and so they're not taking any risk directionally either way. And the only way you can actually quote unquote pump a price is if you give them dollars to buy and bid, right? Because in this instance, right, all you've given them is tokens. So I will just to play devil's advocate here a little bit. That doesn't necessarily mean that a market maker couldn't say, "Hey, we are going to go out and, do our own thing on our own accord if we want to take directional risk in order to execute a call or something like that." Maybe they think the market's going up, or I don't know. But generally speaking, that would, one, be against the client's interests, a relatively shady practice from the market making side, and it would not be perpetuated by the actual client or project itself. It would be totally under the prerogative of the market making firm or trading firm.
Were you able, in this case, able to identify potentially which of your market maker partners was responsible for this?
None of them are responsible for this. I mean, we have 3 market makers, as I mentioned. They all have 1 to 2 million tokens. This was like hundreds of millions of tokens involved.
The evidence that was brought to me, people are saying that Laser Digital was involved in it. I don't know if you wanted to comment on that.
Yeah, Laser Digital is one of our strongest investors, strongest supporters, longest supporters actually, and also one of our trading firms and trading partners. They got linked to a wallet that actually was their wallet. They said that the initial wallet where the transaction came from was them. Absolutely true. And they put out a statement that said basically the wallet that it was sent to was basically just returning collateral to someone, to a client in a financing trade of sorts. And everything that happened thereafter had nothing to do with them, which they've also gotten in touch with Arkham, who mislabeled the wallet, which is where all this misinformation came from. So, I mean, that's as much as I can say about it. Basically, like, Laser Digital has no involvement in any of these activities that went on, other than being a supportive partner. And they've put out their own statement that categorically denied everything as well.
One of the strategies you mentioned to support price was selling tokens potentially over the counter, then using the stable to reinject liquidity or buyback token. And I watched the CoffeeZilla interview, and you guys may have had some beef about.
No beef.
No beef. That's great to hear. What constitutes price manipulation? I guess just kind of, what are your thoughts on that reinjection approach as a model, and is that sustainable?
Yeah, so I mean, first off, we've gone back and kind of corroborated the facts of what I was stating on that call. Obviously, that was like the end of the first day of all this happening, so it was probably like been on 22 hours of not sleeping after the craziest day of my life. It was a tough interview. Coffee asked a lot of tough questions. He's definitely going to try to. He's always got an angle, and he's going to try to pick at it. So this was his angle that he was trying to get me to kind of say something that was his gotcha moment, right? And I think if you actually, again, understand kind of like how market dynamics work, I stated on the call, we did roughly $10 million US of buybacks. And we've gone and kind of looked into it, and I think it was slightly more, maybe 12 million, something like that, right? But the way that these were executed was, over the course of a year. So, over a course of a period of time, we've never sold a single token that we bought back. It was actually just similar to in TradFi where you have stock buybacks, right? That's a normal activity. It's a normal, legitimate, legal activity. And, I think it got turned into this big thing as we're like, it was positioned as if we're doing some sort of manipulation. And I would categorically deny that we did anything like that. And I would say what we were doing was well within the confines of normal business practices, supporting our business, providing liquidity into the market. And in the broader sense, it was nominal compared to the actual size of the market and the amount of liquidity in the market. $12 million over 12 to 13 months is negligible.
That makes sense. And just to kind of put a button on it, would you say that, and how is the reinjection model sustainable, or is it?
I mean, I'm not sure it was ever used as something that was meant to be sustainable or not. It was just, something that, we had an agreement with our partners that, when we would raise capital, a portion of it would go back to supporting supporting our market, buying back tokens, because we felt that the continued development of this would be beneficial in the long run. So we are putting out a fundraising transparency report. And I think it's good that, again, just to show that we're accepting of criticism and feedback. I think it's really important. We're like, I was talking about this in another podcast, like the standard of information and transparency that crypto projects have is horrible, right? So like us just being at the standard is not that good. We can do better, and we will do better. So what we've committed to doing is putting out a fundraising transparency report that goes out and shows, okay, how much buybacks have occurred, how did it actually work, how many tokens were purchased, like, et cetera, right? So this is something that we're going to be doing in the near term. And I think it's something that, we'll continue to do over time in a more transparent way. We've also committed to doing a dashboard that has all the tokens and their wallets and how they're getting tracked and how they're getting emitted and all these different things. So we're putting this out sometime in the next day or so, or day or two. I'm not entirely sure when. But this allows community members to have a very clear understanding, live picture of wallets and transactions and things. I've already publicized my personal wallet. And that's been going around for a long time. Anyway, in our community, people know it. And I had someone the other week like, "Hey, why did you unstake your tokens?" And I was like, "Well, I unstaked them because I want to stake them again on the liquid staking protocol to provide them some TVL liquidity." So people call you out when these things are happening, and that's the good thing about being on chain. It's all verifiable. But the other problem with that is people can assume things without actually doing research and make statements that are just incorrect and inflammatory. And when they catch on and get talked about in the midst of a broader issue, it's very fundamentally important that we get to the core of what actually happened and why this issue occurred, and get rid of those red herrings that are being talked about as these issues causing this horrendous situation. Let's focus on the things that actually happened and try to fix it.
And just to kind of go me a little bit deeper, the criticism is that companies that do buybacks generally have, systems, exogenous systems involved. They have some revenue or something. And if OTC deals are happening to support buyback of those same tokens, does this create a weird form of leverage that has to unwind at some point?
No, I don't think so. We weren't selling, we weren't doing like any of an OTC that happened was not a liquid token OTC, right? These are future dated fundraising allocated tokens that are in our public vesting schedule that we put out to the public many, many times over the last years, right? So we sold tokens in accordance with our public vesting schedule. And in many cases, the vesting is actually longer than the public emission schedule that is put out. So, the information is out there. Maybe we can do a better job of keeping it more up to date so you can actually see, hey, it's not actually even in the market. It's going to be even longer, which frankly is a better thing. But, we want to be as transparent with everyone as possible. And, we want to hold ourselves to a high level of accountability here. And I think this is a good opportunity for us to show that we mean business on it.
In terms of monetization issues in crypto, I watched sort of your block interview on the topic of, close partner selling. You said at 30 minutes and 50 seconds, something like we're not prohibiting selling, we're aligned, and this is what the contract states, then do what the contract states, do the right thing. We're in it so everyone wins. I'm trying to paraphrase your words there. In your words, what is the right thing? How does everyone win? And when is it okay for investors to sell?
Well, if an investor has liquid tokens, it's all within their right to sell. 100%. I think that was maybe I think that, that was with Andy from the roll up, I think. That interview was done in February, and then he pressed me on a few things, and then it came out, and he put it out again recently, in the aftermath, I think because it was timely, and provided a little bit of a different perspective. But I think what I was trying to say there is, we have investors who are aligned for the long haul. And, we have investors who have liquid ERC tokens, right? We have, Laser Digital published their wallets. Sharuk published their wallets. And these are the ones who are kind of wrapped up and implicated in this, at least on Twitter, unfairly and improperly. But they published their wallets and they showed that, hey, we haven't actually sold a single thing. So these guys had the right to sell at any time, and they chose not to. We've had in the aftermath, we've had investors reach out to us and say, hey, we are going to be unlocking in the coming months. We're happy to take a pause. We're happy to extend our vesting because they believe in the long term of the project. Frankly, I want to be very clear, not financial advice. But we've had investors and partners and people who've reached out and said, hey, is now the right time? Because, maybe the narrative did front run the substance, in the past, and now maybe they're thinking, hey, this is actually a much better opportunity for us to get in at a lower valuation. I'm not saying that this is correct, or definitely not financial advice, but I'm just stating what people have actually come to us with, right? So I think, again, the statement that I was trying to make in that interview was, we have a long-term group of aligned investors. And in many cases, they felt, honestly, most of this stuff is just prisoner dilemma and game theory. And it's like, okay, if people think that they're getting dumped on first, then they're going to go dump. But if you have a group of investors who are together, and if they want to execute and sell together, they can sell together. It's well within their right. They can also do it without doing it together. Well, wouldn't you rather have it done in an orderly fashion so it's not going to wreck the market and you don't have these cascading, sales? So that's all I was trying to get at, and I think it was maybe taken slightly out of context. I'm not trying to say Andy did anything negative or bad there, but I do want to provide a little bit more context and nuance to what I said.
And how do you kind of reconcile this point about the narrative potentially, front running the fundamentals and fair value, with the user activity being great? Would you say those are just one and the same, and that the user activity was part of that? Like, the user activity matches up to the front running of the narrative?
I mean, again, I think it's back to what is it? How do you value anything in crypto fundamentally? I mean, I think we're trying to go back to substance, and we had real substantive partnerships, we had real substantive announcements, we had real substantive licensing. We've been building for a very long time. I'm maybe not a known commodity in the U.S. crypto space, but I definitely am in the Middle East and in Asia. We have a large community that's been around for a very long time. And I think the key issue here was, while this was all going down, it was easy for people to come out and say, hey, this is a ghost chain, or this is bullshit, or there's no substance here, without doing a whole lot of research into kind of understanding the project and what it's gone through and all the things that we've been working on and all the things that are coming. So again, I think being pretty much we were the RWA leader period. And we were definitely the RWA L1, period. We're the only RWA L1 outside of Provenance, which that token is, I don't even know where it sits, that was able to kind of bridge properly the kind of the institutional interest as well as the crypto native interest. We're the only RWA token on Binance. Now Ondo is as of last week, but we're the only RWA token that was significant enough on Binance. And we're the only one with a chain. The other ones haven't happened yet. So we were the first mover. So why shouldn't the market be valuing something that's the first mover of a massive, what's perceived as $1 trillion opportunity, multi-trillion-dollar opportunity? Why wouldn't they see that could be potentially significantly valuable? tech stocks and other things front run their valuations, so their substantive valuations. Why can't that be the same for a crypto project or crypto asset? We know that these things have these crazy multiples just because of how crypto works, and obviously there's a lot of speculation involved. But I think fundamentally, it's not my job or my right to say whether it was fair or not. If someone's willing to pay for it at that price, they're willing to pay for it. And we did have people buying at, well, up to $9, which is the all-time high.
Yeah, and this isn't a specific indictment on what you guys are building, but it's more of an issue of monetization across the whole crypto space. And kind of what was the plan for getting real dollars into the treasury? And do you think, and why should that necessarily come before investors? If not before investors, why before retail buyers?
Yeah, I mean, let's put it this way. Like, again, Mantra's been around for 5 years, right? So people who are supporting Mantra since 2023, or sorry, since 2020, have made a shitload of money. Okay, I should be careful what I say, but basically from the beginning of 2024 or the end of 2023 until beginning of this year, like it went from 1-2 cents up to $9 at its peak. And we've had a community that's been supportive of us for a very, very long time that still holds a lot of ohm. And actually, it's amazing to see how strongly they've come together after this, because it's obviously a very traumatic event for a lot of people. But they're still believing, they're still supporting, which I really, really appreciate. But I don't think it's fair to say that the team or the treasury or investors were put before retail in this case, right? Like retail has been a part of this game for 5 years. Investors haven't sold a single thing, or the key ones, right? We've already categorically denied and proven that the team didn't. I mean, again, one of the things that I want to get out there very clearly is like I had already, like, Mantra has two token stories, right? We have the ERC that is 90, almost 100% in circulation now, and the mainnet coin, and we combine those two concepts together to be this like new L1 ecosystem that we've been building out. And on the ERC side, like I've been doing this for 5 years now. Another thing that came out, like it was on Chopping Block, said that we like had a new team come in and like did a reverse takeover on Binance and all this stuff. That's categorically false. I've been the key person and founder of Mantra for 5 years. And anyone who actually does any like little bit of research would know that, right? It doesn't even take you could literally just go in the Telegram and say, who's the founder of Mantra? And they're going to say JP Mullin. Who's been around for Mantra for 5 years? They say JP Mullin, right? So anyway, that's an important thing. I think the point I'm trying to make here is, I had entirely vested my token allocation for the team years ago from the first time. And I gave it all back. And I put it into a new unlocking schedule that was 30 months from the mainnet launch. So 30 months from October of last year. So I won't even have a single team token from when I started it in August of 2020 until the second quarter of 2027. So 7 years of cliff. And then an additional 2.5 years of vesting, which I already put out to the public. I'm happy to burn, reallocate, put into milestones, whatever it needs to be to make sure that I'm aligned with the community. Because in the end of the day, this is my baby. I put my heart, soul, and everything in my life into this business, into this project, into this community, into this team, and I'll do whatever I need to do to make it work.
Just kind of as a follow-up, some of the criticism people have had is that the OTC deal situation is somewhat hard to justify or confusing to the community. They say buybacks are commonplace, but the criticism was that they think that some of these OTC players were trying to exploit immature retail buyers. And I guess kind of the follow-up question there is, how long could these buybacks have continued? And if this didn't happen now, what would have happened when all of those OTC tokens unlocked? Would it have just resulted in a similar liquidation in the future?
I mean, so let's just look at facts here. We did $12-ish million of buybacks over the course of a year, like spread out, right? This is a negligible amount for the size of a market. It's a negligible amount for the size of the volume that Ohm has done. Ohm does hundreds of millions of dollars in volume in a day. 12 million in a year is ridiculous to say that it even had a significant impact. So if that's first and foremost, I want to say. But two, again, the OTC schedules, and by the way, we're going to put as much transparency around this, and we're going to put our reports so everyone can verify and everyone can see. But the OTC schedules were aligned with our public emission schedule that we put out to the public transparently from day one. That has never changed. So saying that this is going to have like some sort of cascading effect when these tokens unlock, like you've already been making your decision to invest in this or not based off the public transparency and issue and emission schedule that's been out consistently. That is not new information. These OTCs are not any different. If what we were doing is saying we're going to go take OTCs and front run the emission schedule, that would be a fucking problem. Excuse my language. That would be a big problem. But that's not what we did.
This is just to kind of follow up on the next question. This is something that was mentioned in the CoffeeZilla interview that I watched. Any sense of the identity of the big OTC seller with the urgent request? I think it was something like 45 million. And
I had never heard of this Mr. P until that morning. I had actually a couple people ping me about him. And then I was on a Mario and Alpha space 2 days ago or 2 nights ago. And someone reached out to me basically saying that they actually Coffee mentioned this. Like there was this NFT project called Mamba Base ETH or something. I'd never heard of it in my life. And the founder of that apparently got scammed by this Mr. P guy. And I've been talking to him, literally, I've been talking to him just as today. And he was sending me this dude's, legitimately, he's sending me this dude's passport, who's apparently this Mr. P guy. He's some Israeli dude named Itai Drori or something. And he has a bunch of different names. He sends me this crazy thing. He goes by Mr. P. He goes by Kit, Itai, really, really crazy stuff. And apparently he scammed and screwed over this NFT thing. So I don't know who this dude is. I've never heard of him, but it's definitely fishy and definitely sketchy. Because it was too coincidental that all this stuff happened right around the time as this whole thing went down on exchanges. So, obviously collecting more information as I can and, take everything with a grain of salt. I don't know who this NFT or meme coin guy is, but he reached out and I'm just, sharing the information that I have. But apparently this is not the first time this guy's done it or done something sketch. And by the way, I talked to Zach XBT about this as well. So I talked to Zach and obviously I talked to Coffee a little bit about it, but
why do you think they were moving with such haste, I guess? Because there was other large OTC sellers trying to move quickly. Some of the I heard there's some Telegram screenshots that came out mentioning the price movement. Do you think that was the reason, or
I would imagine if you're going to kind of connect these two dots, you would imagine that these were, well, I don't know about this Mr. P guy, but he just seems like, kind of malicious actor in this whole situation. But if the whole situation was based off of a massive liquidation and collateral seizure, I would imagine that someone was trying to top up margin in a different form of collateral.
this is kind of a question that I've been getting over and over. Can you speak on your current or former relationship with Jim Pressler? The story is that your previous company, Soma, you raised with the SAFT and Rugged, but gave millions of dollars to investors. This was one of the claims that was brought up to me. I just wanted to know sort of your response to those claims.
Yeah, so I'm still in active communication with Jim and Bill and Will. Soma Finance is a U.S. regulated broker dealer and kind of issuance platform. So Soma is the platform. Tritorian Capital is a broker dealer. It has special licensing from FINRA and the SEC. It actually is going to be launching. It's supposed to launch at the end of this month. I think it might be slightly delayed just because of this situation. But it's a project building on Mantra. It has licensing and broker dealer issuance capabilities. And it'll be issuing and launching the token literally in the coming weeks. So there's no rug there, and it's a FINRA SEC regulated business. Mantra was one of the founding partners of that and was building a lot of the tech out during 2022 and 2023. And now it's still a partner of the business, but it's more Mantra's become the chain and Soma is an app on the chain.
Why am I getting these questions? Because people, I guess, do have the perception that gave millions to investors, and I'm not the one who came up with that. So I guess, what do you think the origin of this? Like, why are people claiming this?
I mean, I think there's two things, right? So one, full transparency, Soma has been a long time coming, right? But we've still continued working on it. I'm not like actively working on Soma because I've been working mainly on the protocol, but the team is still working on Soma, or portions of the team are, and it's been a challenge to launch anything in a U.S. regulated context, with particularly under the previous administration and particularly in the past years, right? So now things are shifting, things are changing, and I know for a fact that it is going to be launching imminently. So you don't launch something if it's a rug. Did it take a long time? Yes. Are people trying to find any way to poke and say that we're mistrustful or not legitimate people? Absolutely, and it's the right to poke and it's the right to ask questions, and I'm happy to answer them. Right, I'm not shying away from this stuff, and I appreciate you bringing it up. But again, I don't feel like there's any wrongdoing, particularly with Soma. It's literally the token is issued under a Regulation D, Regulation S, and Regulation CF, SEC private placement exemption. It is a completely regulated offering and was done completely properly, and will be launching imminently, and look forward to that. And then that will be the action that dispels any misinformation being perpetuated in the market on Soma, at least.
Obviously, a lot of people are blaming you for this. There's a lot of blame sort of going around. Where do you assign the blame for this? Would you say it's a risk management issue on the part of large insiders, the foundation? Would you say this was the exchange's fault mostly?
I'm not going to point fingers here, but I just want to so I'm not going to point any fingers. I think that's not really the job here. But what I can do is just talk about facts, right? If you look at the facts here, the team did not sell, right? Our tokens are locked. We've publicized our wallets. You can look on chain. We've publicized a statement of events as well as a transparency report last week about where the tokens and the wallets and everything else sit. The team didn't sell. The investors didn't sell. They had liquid tokens. They publicized their wallets. It's very clear that they didn't sell. This was not an insider thing. All right. So that's fact number one. Fact number two, you look on chain, and you look on exchange movements and token movements, and you can see that there was leverage on an exchange that did collateral ratio haircuts, and that reduced the collateral ratio on one exchange, and then the risk and those tokens moved to another exchange that still allowed tokens to be used as collateral with higher LTV. Right? You can look and you can see the movement of that. And it went from one exchange being the number one token holder to another exchange being the number one token holder. And you can insinuate that leverage and collateral moved over there. Then you can see, based off of those third-party analyses, that something happened and there was a targeted price move that then caused liquidations and forced selling and caused a downward death spiral, basically. But fundamentally, Mantra as a business is still financially strong, solvent, continue building, what we're focusing on from an RWA perspective. It's definitely a big bump in the road for us. It's been a very, very challenging week. We're trying to get out as much as possible, control the narrative, communicate with our investors, communicate with the community, our exchange partners, regulators, anyone who needs to be. We're not shying away from anything, even in these tough times. And we fundamentally believe, we did nothing wrong. Could we do stuff better? Could we be more transparent, and will we be? Absolutely. And now we know, based off of all this going down, like, hey, there was a lot of leverage in the system. We need to figure out how to do that, or how to be better at managing that. But in the end of the day, if the exchange allows this amount of leverage to happen on their exchange, and they're using this token as collateral, and retail can do it, and anyone who wants to can go out and buy tokens on exchange, we can't stop that. What are we supposed to do? It was all within the rules and the confines in terms of business of these various different exchanges. So until we have information from these exchanges, what happened, who lost money, and where did it go, there's only so much we can do from that perspective. So what are we going to do is continue to be transparent, share as much information as possible. We've done that over the last few days. We're going to continue doing that in the coming days and weeks. We're going to work on this burning program. We're going to work on this buyback program, and we're going to continue building the business and doing as much as we can to instill trust back in the community. Like I said, Mantra and Ohm has been down nearly 97% before. And I thought that was the greatest comeback in crypto history, but I'll be damned if we don't make the greatest comeback in history and that becomes the number 2.
I look forward to seeing the community reactions. So thank you again, and hope to chat with you soon.
Anytime, man. Reach out anytime. We're always happy to communicate here, and hopefully we can do a refresher in a little bit once the dust settles.
Hey, what's up?
This is
But
Zach.
it's not something Genzio is afraid of.
If you want to survive, you got to build a
How
hive.
many know we do not understand that we do not understand?
Ladies and gentlemen,
Rebecca's Genzio Media House.
Oswald, thanks so much for joining us today.